This new Ripple update from the US could quietly change where XRP is headed next. What is going on, XRP Army? Welcome back to the channel. Today we are breaking down a specific US update that has gone largely unnoticed by the retail crowd but has the institutional whales in a frenzy. We are talking about the ripple effects, pun intended, of the New York Department of Financial Services, NYDFS. Officially greenlighting the Ripple stablecoin RLUSD for institutional use. This isn't just a license, it is a golden key to the US banking system. While you are watching the price consolidate around the 280 level, wondering when the breakout to $5 is coming, the biggest banks in America are quietly running pilot programs that could change XRP's future forever. The headline is Ripple's US update, but the real story is about federal level integration. In this deep dive, we are going to expose the leaked details of a potential US Treasury pilot, why this NYDFS approval is the catalyst for a supply shock in 2026, and why Standard Chartered is now calling XRP the backbone of the digital dollar economy. Let's start with the NYDFS approval. Why does a state regulator matter so much? Because New York is the financial capital of the world. If you can make it there, you can make it anywhere. The NYDFS has the strictest crypto regulations on the planet, the BIT license. By approving RLUSD, they have effectively vetted the entire Ripple ecosystem, including the XRP ledger, as safe for Wall Street. This removes the compliance risk that has kept banks like JP Morgan and Citi on the sidelines. We are now seeing reports that major US custodians are integrating RLUSD not just as a stablecoin, but as a settlement instrument on it for their institutional clients. This means that when a hedge fund trades a stock or a bond, the settlement happens instantly using RLUSD, with XRP burning in the background as gas. This is the utility switch flipping on in the US market. We need to talk about the federal pilot rumors. There is a lot of chatter in Washington about the new digital asset working group established by the White House. Sources suggest that the US Treasury is looking for private sector partners to pilot a wholesale stablecoin solution for interagency payments. Ripple is reportedly on the shortlist. Why? Because RLUSD is now the only enterprise-grade stablecoin with NYDFS approval and a native scalable ledger, XRPL, that can handle the volume. If Ripple secures even a pilot with a federal agency, the validation would be worth more than 1,000 ETFs. It would make XRP a matter of national financial security. This is the change that the title refers to. It shifts XRP from a crypto asset to government infrastructure. Furthermore, let's look at the ETF inflow data. Since the spot XRP ETFs, Bitwise, Canary, Franklin went live, we have seen over 1.5 billion in net inflows. But notice something interesting. The price hasn't exploded yet. Why? Because the market makers are suppressing the price to fill the ETF custody vaults. They need to buy millions of XRP to back the ETF shares, and they want to buy it cheap. This NYDFS update forces their hand. Now that banks are also competing for that same supply to use for RLUSD liquidity, the cheap XRP window is closing fast. We are approaching a liquidity crunch where ETF issuers and US banks are fighting over the same dwindling pile of coins. We also have to address the Standard Chartered report. The banking giant recently updated their 2026 outlook, calling XRP the dark horse of the US recovery. They argue that as the US moves to digitize the dollar to compete with the BRICS currency, they will rely on private stablecoins like RLUSD rather than a CBDC. In this scenario, XRP becomes the neutral bridge asset for the entire digital dollar economy. Their price target in this scenario? 8 Tarhawas to 10 Thordingward by the end of the cycle. This isn't moon math, it's based on capturing just 2% of global FX volume. Finally, look at the volume shift. For the first time since 2020, US trading volume on XRP has surpassed Asian volume during New York hours. This confirms that US investors are watching closely. They are reacting to the NYDFS news. They are positioning themselves before the federal pilot is officially announced. The smart money always moves first. Now let's pivot to the infrastructure layer, the DXC technology TARG connection. This is the piece of the puzzle that almost everyone is missing. DXC technology runs the Hogan core banking platform, which processes over $5 trillion in deposits for major US banks. Ripple has been quietly integrating its payment protocols into this specific software stack. With the NYDFS approval of RLUSD, DXC can now legally turn on the switch for its banking clients. This means a regional bank in Ohio or Texas doesn't need need to build a crypto department. They just update their DXC software, and suddenly they can offer real-time payments powered by XRP. Let's discuss the collateral utility update. We mentioned LMAX in previous videos, but this US update takes it further. Major US clearinghouses are investigating using RLUSD as intraday collateral. Currently, banks have to park billions of dollars in Nostro accounts just to cover potential trades during the day. This is dead capital. By using RLUSD on the XRPL, they can free up that capital and only move it when a trade settles in 3 seconds. This efficiency saves banks billions of dollars a year. And to use the XRPL for this, they need to hold XRP to pay for the ledger throughput. This creates a baseline demand for XRP that is completely independent of the crypto market cycle. It is operational demand. We also need to talk about the political shift. With the new administration's focus on American leadership in digital finance, the headwinds against Ripple have turned into tailwinds. The SEC has backed off. The Treasury is engaging. This US update signals that the government has decided to use Ripple rather than fight it. This is a strategic pivot. They realize that if they don't use American technology, Ripple, the world will use Chinese technology. XRP is now a geopolitical asset for the United States. This national champion status is something that Bitcoin and Ethereum don't have in the same way. Furthermore, let's look at the institutional DeFi angle. With the EVM sidechain now live and bridged to the main ledger, we are seeing US institutions launching permissioned pools, or dark pools, on the XRPL. These allow them to trade large blocks of assets without moving the public market price. The NYDFS approval gives them the regulatory cover to do this. We are seeing massive wallet transfers, 100M plus XRP moving into these sidechain contracts. This locks up supply. It takes it off the market. When you combine this sidechain lockup with the ETF lockup, the floating supply available for retail investors is shrinking at a terrifying rate. Let's address the price action frustration. I know it's hard to watch XRP sit at 280 when other coins are pumping, but you have to understand the coil effect. XRP is the only asset that hasn't had a full bull run since 2017. The energy stored in this consolidation is massive. The US update is the trigger. When the price breaks the 3.00 resistance, there is zero friction until the all-time high of $3.84. And once we break the all-time high, we enter price discovery. In price discovery, there are no sellers. The price can double in a week. We saw it happen in 2017. The setup is identical, but the fundamentals, NYDFS, ETFs, DXC, are 100x stronger. Finally, we have to touch on the network activity. The number of daily active addresses in the US has spiked 40% in the last month. This is not retail FOMO. Retail FOMO looks like 500% spikes. A 40% steady increase is institutional onboarding. It means businesses are connecting their APIs to the ledger. This is the utility signal we have been waiting for. So, Ripple's US update could change everything. The update is the NYDFS approval, and the change is the integration into the very fabric of the US economy. We are looking at a future where XRP is the backend for the digital dollar. This isn't speculation anymore. The pilots are running. The ETFs are buying. The banks are updating their software. What is your strategy? The roadmap for 2026 is clear. We expect the 3.00 resistance to break in Q1 as the ETF inflows accelerate. Once we clear $3.84, the path to T5 to skies opens up quickly. My strategy is aggressive holding. I am not trading this range. I am not trying to flip for a 10% gain. I am holding for the structural repricing that comes when a global asset gets adopted by the world's largest economy. The risk of selling too early is far greater than the risk of holding too long right now. A critical warning on patience. The institutions want you to sell. They want you to get bored at 280 so they can buy your coins before the move to 8 Tarozaris. Do not give them that satisfaction. Look at the data, not the candle color. The data says accumulation. The data says adoption. The data says supply shock. Also, be aware of scams. With the US news heating up, you will see fake Ripple buyback programs. You will see fake Fed pilot tokens. Ignore them all. The only play is XRP and maybe RLUSD for yield. Keep your assets cold. Keep your keys safe. The bottom line is this: the US was the final boss. Ripple has beaten the final boss. Now we play the bonus level. The bonus level is global adoption with US liquidity backing it. This is a scenario that was impossible 2 years ago. Today it is inevitable. Thank you so much for watching this deep dive. If this analysis helped you see the bigger picture behind the NYDFS news, please smash that like button. It helps us wake up the masses. Subscribe and turn on notifications because as soon as the federal pilot is officially confirmed, we will be live. Stay strong, stay safe, and I will see you on the moon. Peace.